US dollar slash the South African rand. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. We do have a 9-ish% move here from the 52-week low and the minus 13-ish% pullback. So let's just jump into the charts. So this is the very big picture. So even when we go back here to 1998, I mean, we can go even further than that. These time cycles have been relevant for a long time, so you could make a very strong case they must reflect something real, something more profound. Rise, decline, rise, decline, rise, decline, rise, and we are a bit of a... the expectation is decline. So yeah, I mean, there's something obviously with these time cycles. So yeah, it's a very interesting field in technical analysis. You know, cycle analysis. It's a field all to itself. There is the potentiality that we might form an even bigger pattern, and that is potentially our gargantuan head and shoulders pattern. So this could become a monster shoulder. Maybe this becomes a monster head, and then we could form a monster shoulder. It's possible. Of course, that is purely technical. Of course, behind the chart, there's politics, news, real events. So we have to be a bit careful as well, when we do technical analysis. And though we did find some very interesting patterns. We have recently seen some pullback. We are at a relatively low level. You could argue that we have some horizontal support. So let's draw that in like that. So you have support here. Here you have a bit of a cluster of support here as well. Very surgical support there. Here. So this is a level where you would expect the bulls to do something. Looking here at the daily data points. So here on the daily data points, we are very close to testing the very important red 200-day moving average. Not only that, we also have this blue 100-day moving average. It has been smoothing out, turning positive, and is ready to send a very positive crossover signal. We did get the golden cross here. We got the death cross here, the 50-day crossing below the 200-day moving average. Then we did have that sell-off. You could also make the case that we are forming an inverse-ish head and shoulder. So we have a bit of a shoulder here. This is a bit of a head. Here is a bit of a shoulder. But, you also could argue that there are multiple shoulders. So it's a bit of a hybrid of an inverse head and shoulders pattern and a rounding bottom. But, these are bullish technical patterns. So there is the potentiality here, at least that there's a bullish thesis emerging. Nothing that really jumps at me here in particular when it comes to these indicators. On these weekly data points, we have a bit of a bullish MACD here about to, we are getting above that 0 line that's, interpreted as, bullish. Here on the daily data points, the distance from the purple 20-day moving average is at a level that has a tendency to produce some rallies. So that is, more temporarily bullish. So even though from a longer term picture you could make the case that we have maybe a more major bearish pattern in development, looking more shorter term, there's more and more evidence now of a potential bullish trade, which would mean that the US dollar would strengthen vis-a-vis the South African rand. So here are correlations, weekly data points. Minus 19% with the S&P 500, minus 20% here with Bitcoin, and minus 95% negative with the South Africa Stock Market ETF, the EFA, and 29% positive with the dollar index. So here we have, on the daily data points, 14% positive correlation with the S&P 500, 35-ish% positive with Bitcoin, minus 84% negative with the South Africa Stock Market ETF. So there's a very clear negative correlation here with, so strengthening in the US dollar vis-a-vis the South African rand is clearly bearish for, the South African stock market. And there's an 85-ish% positive correlation here with the dollar index. When we go here to seasonality, over the last 5 years, then we do see that there's a clear weakening, and November is the weakest month. Over the last 10 years, all of a sudden, from October to November, we see a significant strengthening, and also January is strong over the last 20 years. So from October to November, we tend to see an increase in strength, for the US dollar, but not like roaringly bullish, because December is, one of those mediocre months. But January is, one of the strongest months. So the seasonality here is a bit messy, which is why I think the context is especially important. When we look here, at the chart, and we look here, this is big picture. We have already seen a bit of a pullback. We do have that horizontal support level that we did find. You could also make the case that on the daily data points, we are forming a hybrid of an inverse head and shoulders pattern and a rounding bottom. So that's, bullish. So yeah, I think I would lean a bit bullish here, but this is a clear example also of how you could also have a bit of a messy situation when investing.